All right, running through the weekly review for Monday, the 25th of August, 2025. So this is a really interesting week. I've just gone through and had a look at all the timeframes, and there is a lot of very notable things I want you guys to focus on. It's going to be a really good learning opportunity this week in terms of how this is all forming up. So on the weekly timeframe here, as always, starting on the weekly, I'm not going to discuss that we've had this prolonged upside expansion. We've discussed that the last couple of weeks on what that has done. So we're continuing this bullish trend. Over the last 2 weeks, we have actually been bearish because on this week here, we closed below this weekly fair value gap. Obviously between this week high and this week low, that weekly fair value gap, that is our reference point. So we tried to respect it, closed below it. That's why we flipped bearish for those 2 following weeks. And then last week, we have actually closed back above our reference point. So back above this weekly fair value gap. Even though it's been disrespected, this is now our reference point to determine where price wants to go. And because we have actually closed back above it and have no longer respected it as resistance, we're going to expect this to be used as potential support to reach up into this draw on liquidity up at these highs here. So essentially looking for, I'll just get my marker, essentially looking for a retracement back into our old weekly fair value gap. Again, even though it's been disrespected, it can still be used as potential support, as a retest. So expecting a retracement down into this and then expansion away up into this major external draw on liquidity. So that's all I wanted to note on the weekly time frame. Now this is where it gets interesting, dropping into the daily. So obviously we were bearish over the last 2 weeks after we had this pretty major downside expansion. So we're expecting this sort of formation and then a downside continuation. However, because we have closed back above this weekly fair value gap, we are obviously now flipping into a bullish bias. And if you zoom into this formation here, so we've reached back up into this weekly fair value gap and we've tried to reject it. However, price has just been consolidating within this block, which when price does this, this is a sign that it's going to break through that zone. So when price reaches into a zone, you want to see a pretty swift rejection. So you want to see it tap up and just expand away pretty aggressively, which that has obviously not done, which is telling me it's likely to actually break back to the upside and reach up into these highs up here. Now, just want to note this formation. This is a massive key in terms of understanding market structure. So if you look at the daily time frame, it's basically doing this, creating higher highs and higher lows. And then what it's actually done right here on the bottom of this candle last week, it dropped below a previous daily low and then had this aggressive expansion up. So basically what it's doing in this situation is it's dropped down below an old low, swept out the liquidity from that structure, and had a very strong upside reaction. And this is telling us that there is a lot of strength to the upside, and that's where the market actually wants to reach into because it's collecting liquidity below lows and distributing it higher. So in that sort of formation, what you can expect is a retracement and an overall continuation. So if you look at this daily structure, expanded up, high, higher low, higher high, higher low, higher high, and then we've dropped down and taken out the liquidity. So right there, and then had this swift upside expansion. So moving forward for the week on the daily time frame, what you can reasonably expect is for price to retrace and again expand higher. Okay, now dropping into the 4-hour time frame, we can start marking this up. Actually, before I do go into the 4-hour time frame, I do just want to note on Friday's trading, we did take out this high, which means that we've already taken out liquidity on the Friday. So going into Monday, we will not be looking for any trades at all. We need to see price reaccumulate, then take out, say, Monday's low. So let's say, for example, we obviously had Friday's expansion like this. On Monday, what you'd want to see is a little bit of a chop around. And then come Tuesday, you'd want to see price drop down, take out Monday's low, and then look for long positions there. So that's sort of where my head's at in terms of planning ahead. This could play out in a few different scenarios. You could have Monday consolidate, Tuesday consolidate, and then you take the trade on Wednesday. But you can't predict that. We just need to wait and see what happens. Now dropping into the 4-hour time frame. So it starts making a bit more sense here. Everything's starting to align. So obviously we had this choppy consolidation as price is struggling to break down from that zone, and it's actually showing us upside strength, which is good. Very strong upside expansion on Friday's trading. When you do get very aggressive expansions like this, what price normally has to do is it has an aggressive expansion. It needs to chop around and actually retrace before it has the opportunity to make a secondary expansion. So more often than not, that's what you'll see. So based on that thought pattern, you would be expecting a deeper consolidation. So Monday's range, drop down, and then take off. Ideally, tapping into the 50% of this 4-hour range, and that would be the perfect trade opportunity to go long from there. So that's pretty much what I'm looking for moving forward on the week. Just want to see that retracement a little bit deeper, and then we can go from there. Not to be confusing, but the only other scenario we may possibly see okay, no, we can't look for that. So yeah, that liquidity's already been taken. Yep, so we're going to need to see Monday's range get created, and then Tuesday we'll have to break below Monday's range at a minimum for us to look for any trades at all. So that's it for the analysis. Let's jump into the calendar. So I've already had a bit of a look through this. It's honestly such a clean week. We have no NFP, no CPI, and no FOMC. There's no announcements from Trump. There is nothing that's going to catch us off guard at all. We just have a few high volume events. So we can trade every day this week, obviously apart from Friday. So we'll start working through it. So on Monday, you can expect some volatility. We have home sales at 10 o'clock. Moving on to Tuesday, we also have some high volume events. We have the durable goods orders, should bring in a decent amount of volatility. But that's all I'd really note in regards to Tuesday. Wednesday, nothing really at all. We have crude oil, but this doesn't really affect the price of EUR USD much at all. So I wouldn't even be concerned about that. Moving on to Thursday. Now this, in my mind, is going to be the most highly volatile, impactful day of the week because we have continuing jobless claims and also GDP or gross domestic product. This is an extremely significant event. So I'm expecting a lot of volatility around this point. All these are happening at 8:30 and initial jobless claims as well. So what I'm going to do at 8:30 on Thursday, if I am looking for a trade or if I'm in a trade, I will be very cautious. I might move my stop loss to break even a little bit earlier just to avoid getting screwed by whipsaw price action due to these events. And then going into Friday, just a standard Friday, nothing to note at all. So that's it for this week. If you have any questions, be sure to send me a message and we'll see how it goes.